Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, we're finally back here on YouTube. It's been a fair old while. This is due obviously to the summer holiday. I've had the kids off school at home with us. We've had a wonderful time. Lots of fun days out in the sun, but it's over now. They're off back to school. And this means I've now got some more free time on my hands. Now, all I've been doing during the summer holidays, I've been doing my usual Patreon weekly update. Every week for my patrons, I put out a video covering Bitcoin, gold and the SPY. I've also been doing asset coverage where I can, asking questions where I can. But obviously, being so busy over the summer holiday, I haven't been able to do that much. And I haven't really been able to do anything for YouTube. So we're now going to try and get ourselves back on track. The good news is my little boy is now going up from 2 days a week in the nursery to now 4 days a week. Eventually he'll be starting off 3, but we're going to ramp it up over time, and this will give me an extra 2 afternoons a week where I can sit down and get some more work done. So over the coming months you will see an increase, I should say, in output here on YouTube, as well as my patrons will enjoy more of my time as well, and I will be able to cover more asset requests and able to do more work overall. So it won't happen overnight, but we'll ramp it up over the next few weeks and months, which will be good. So today here on YouTube we're going to be covering gold and silver. It's been a long time since we've done that. Now I know a lot of you will be disappointed because you'll be like, oh, I was hoping it would be Bitcoin. Don't worry, that's on its way too, and we'll deal with that pretty soon. Now, like I said, if you wanted access to my latest Bitcoin update via my Patreon, that was just a couple of days ago. You can find the link in the description box below this video and you can sign up and get access to that weekly update. But either way, let's crack on with gold and silver. So since it's been a long time, we're going to start by zooming out a long way. Going to switch off the primary count. We're going to come all the way out to the monthly time frame, and we're just going to give people a bit of a reality check on what's actually happening. Now, any of you who followed my channel for the last few years, well, any time really since I first started my channel, will know that I'm a long-term precious metals bug, gold bug, and a long-term bull in the precious metals market, and have been promoting a primary bullish count over the extreme long term for as long as I've been posting analysis on the asset. That's historically verifiable. You can go check it out for yourself, and evidently I've been right to do so. Okay, now I'm not blowing my own horn. I'm simply pointing and asking everybody to stop for a minute and just look at the chart. Okay, because I would argue it's pretty obvious what's happening. Okay, so gold is on a bit of a rocket ship. You could call it a tear, but it's definitely more of a rocket ship. And if we bring up our exponential moving averages on the monthly time frame, we're above the 10, the 20, the 60 and the 250, and they're all accelerating upwards. And this is a trend which has been going on, this upward trend of left to right has been going on for as long as gold's existed. Or that, for as long as we've been recording the price action of it, in dollar terms at least. But probably over the entire history of humanity. But either way, the trend, the long-term trend, continues. On our MACD and on our RSI readings, we can see that we have reached levels in the MACD, moving average convergence divergence, basically a momentum indicator, the likes of which we have never seen in the history of the asset. It's absolute bananas. And if we look at the RSI, we are at readings we haven't seen since the quantity of volume and trading around this asset was non-comparable to what it is today, and that has to go all the way back to 1979, and we are now back at those extreme RSI readings on the monthly time frame. So in other words, shit be crazy, and it be continues to be so. So this should really be the time, and I think, given keeping my ear to the ground, so to speak, the time where more and more people are getting interested in gold and precious metals and trying to find exposure to them. And this should be when more and more of the general public and Joe Public and everybody else is starting to show up. And I'd argue that we're not at hype or fever pitch hype levels yet, but we are definitely starting to see a very much increased interest in gold over the last few months and the last couple of years. And it continues to increase, I feel. But of course, you only get to buy gold at the price you deserve it. And, you know, there's another commodity we talk about, which is a very common saying, but it is absolutely true. And so I just wanted to bring people into the loop and remind them of what exactly gold has managed to do over that period. I also want to point out today just how far behind silver is, even though the price action is extremely similar. So let's bring up silver on the commodity here, and we're going to go for new price scale so that we can actually compare it to gold. Obviously, if we put it in the same price scale, it would be minute, as gold is currently around silver is currently around $40, and gold is currently around 3,000. Well, it's 3,474. So what we can do is we can adjust to line up our graph, so that we can get an idea of where gold is relative to silver when we adjust for the scale so we can see it clearly. Now, as you can see, the peaks line up. So here's the peak back in 1980, and here was the peak in gold. If we put gold into line, it will make it a bit clearer. Here is the peak in 2011, and here is the peak in gold. Okay, as you can see, where gold went, silver overran. Where gold went, silver overran. Okay, this time, thus far, the high in silver of 2011 has yet to be transgressed by the price. Meanwhile, the price of gold in 2011 was $1,800, and the price today is 3,474. We have gone way past it. Okay. Now, this doesn't mean that we're guaranteed that silver comes chasing all the way past its 2011 highs and eventually overshoots gold, but it's a possibility. Not in actual price terms, in relative price terms, okay? It's possible that it overshoots relatively to gold's performance. It would seem pretty crazy right now to suggest such a thing, but I've been suggesting it not just now, but for many years. Silver often races to catch gold. Now, we haven't gone through those all-time highs in silver yet. So perhaps there's an opportunity that exists in silver which is gone or has already been missed in gold. Now, long term, and I mean long term, that opportunity still exists in gold. Don't misunderstand me, we are still going from left to right, bottom left to top right. But a lot of the work of the longer term count at quite significant wave degrees has been achieved since the lows of 2015, which was this rally up. Okay, now it's never too late to own the shiny gold metal, the shiny yellow metal, but it may still be relatively early to own the shiny silver metal. Now that's just conjecture, I can't prove that, I don't have a crystal ball, I'm just looking at the performance of the two assets comparable to one another over time. Okay, so now that we've looked at gold and silver's performance over the long term, let's frame this long term gold count in a way which explains my bullishness and what I think is going on. So we're going to turn off the silver chart for a minute, and we're just going to look at gold, and we're going to bring ourselves into log chart. So I just want to point something out before we do that. Let's mark that 1980 high. Here's that 1980 high back here at $875. Right, it looks a long way away. Let's now come into log and adjust the chart. Here's that 1980 high, sorry, in log. So obviously with the skew and the chart, adjusting for the skew in the chart, we can now see that this correction back here looks much grander and much bigger in scope. It was small in price relative to where we are now, but it was extremely big in time. But I guarantee you, at the time, coming up from $35 an ounce off of the gold standard in the 1970s when Nixon broke the gold redemption rights of every nation which has stored its gold in the United States and took the globe off of the gold standard. Since then, price went from 30 odd bucks, and it had that run up into the 1980 high of 871. Since then, it's gone up to over basically 3,500. Okay, so monetary debasement in a graph, essentially, is what we're observing. So now let's bring up our simple long-term count. To explain all of this, this is an original pitchfork based off of the beginning of a chart back in wherever the hell this was, 18 something or other. And then we're going to Grand Super Cycle Wave 1, which was the high in 1980. And then we have a 7,153 day correction, commonly known as 20 years. And this drawdown was massive. Right, this was a 71% drawdown in gold price. It took 20 years to do it. So imagine, if you can, the short-sighted impatience of the average trader today who's flipping cryptos on the minute chart, trying to comprehend a 20-year correction and rationally remaining bullish for the period beyond that correction. I would argue that it was pretty difficult for the most dyed-in-the-wool, hardcore, long-term sighted investors of yesteryear to maintain that level of patience. I'd argue it's beyond the capacity of 99.9% of people walking the planet today. Okay, but it was a wave 2, and that means that we are in long-term Grand Supercycle wave 3. Within Grand Supercycle Wave 3, there will be a Supercycle 1, 2, 3, 4, 5. Within that, there will be a Cycle 1, 2, 3, 4, 5. Within that, there will be a Primary 1, 2, 3, 4, 5. Within that, there will be an Intermediate 1, 2, 3, 4, 5, and so on and so forth. In each of the waves, in each of those larger waves, sub-waves, that will be true all the way down to the minuscule scale. And this is what we're in. So, the next question is, have we had Supercycle Wave 2 yet? Maybe, maybe not. I've counted the next significant correction of 1,523 days as Supercycle Wave 2 because the continuing structure from that point creates what looks like a typical Wave 3 extension. 1, 2, and then 1, 2 overlapping within it, and then the breakout into Wave 3 at 2 lesser degrees. 3 lesser degrees primary, or 4 I'm saying, primary within Cycle 1, within Supercycle 3, within Grand Supercycle 3, and to remind ourselves why we believe, or why we can believe that we're breaking out into Wave 3, here's the linear chart again as a reminder. So we've gone 1, 2, 1, 2, 1, 2, maybe at 2 degrees less than this degree, I'm not 100% sure, maybe at 1 degree less, that's the only thing I don't know. But here's the 3 breaking out, going vertical. That's about as clearer extension behaviour as you can possibly get in Elliott wave. Okay, and it's been on the cards forever. Right, basically, unless you're significantly older than me, it's been here telling you and broadcasting its presence for a very long time. And now here we are on our way to the moon. So, bring it back up again. We can label this 759 day correction, as ludicrous as it may appear. We can label this cycle 1 and 2 if we wish, and suggest that we're now already in cycle 3, and the smaller waves we see within it are in fact primary wave degrees. I'm not so confident about that. I'm still counting this move up as primary waves up to complete cycle 1 for another big deep correction into cycle 2 before finally going off into that massive 3 of 3. Now I might be too, within my broader long-term bullish analysis, I might actually be too bearish suggesting that. I don't know. I just feel that the speed at which we're starting to accelerate and the time frames are getting so small relative to the larger time frames before that they don't feel big enough to be 1 degree less than supercycle degree. But I don't know, we'll see. All I know is that my count over the shorter term is tracking very truly. I'm just not 100% sure on the way. I'm just not 100% sure on the way to green, which is doing it. So anyway, I'm starting to waffle, so let's stop there. And now let's come in and have a look at the primary count over the shorter term then. So let's come down to the 8 hour for a moment, and let's zoom out. Let's come down to the day chart. And let's look at everything we've got from the low of 2015. We'll turn off the simple count. And here we can see a 5-wave move into what I'm calling primary wave 1. Remember, this could be cycle wave 1. It's just a wave degree that's different. It's the same idea. We then come down into primary 2. We then advance into intermediate 1 inside of this base channel to the median line of the pitchfork of the primary wave degree. We then come back to form the low of the base channel at intermediate degree 2. We then break out through the median line of the primary degree pitchfork and break the base channel of the intermediate degree. We backtest it with the wave 2 of a minute degree, and then we move higher again still. This is within minor degree, so we go 1, 2 minor degree, 1, 2 minute degree, 3, 4 minute degree, 3, 4 minor degree. We then break out higher again until we top recently in April of this year in intermediate wave 3. We've now been working sideways in a triangle of intermediate wave 4. So what's all that mean? Well, let me show you. Let's break it down super duper simple again, and let's add in a shorter term count. So you can say 1 into 2, 3 into 4 into 5 intermediate degree. We can get ourselves a Elliott channel like so, and we can place it on the chart like that, and there's our current 5 waves up. 1, 2, typical extension behavior, falling out of the channel and then racing to catch up. 1, 2, 3, 4, and now pushing up in the 5th. That's what I'm saying over the shorter term. Right, we'll just put that in a separate folder. And now let's bring back up the primary, and we can now zoom all the way into the hour chart, and we can get a look at this count on the smaller time frame. So let's make that our focus now then. So since we peaked in April back here, and then we moved down into the first swing low of May 2025. We then swung in 3 waves up to a lower high. We then swung in 3 waves back to a higher low. We then swung 3 waves up into a lower high. We then swung back 3 waves down into a higher low. This is a triangle. A, B, C, D, and E. From there, we have moved up in a wave 1, 5 waves up, and back into a wave 2, into the target zone between the 50 and the 61.8% Fibonacci retracement golden zone. And then we've extended 1, 2, 1, 2, 1, 2, overlapping, 1, 2, and now we're breaking out in a series of smaller wave 3s, which are now starting to overlap as wave 4s up here. So we can say, for example, continue this as 3 into 4, like so, into 5, which is therefore 3, now into 4, into 5, and so on and so forth. And now this is starting to channel upwards like so. Okay, and that is where I've got the bullish count at the moment. We've completed intermediate wave 4 within primary wave 3. Primary wave 4 will eventually ensue and go sideways for longer, and then we will have primary wave 5 within cycle wave 3, and then cycle wave 4 within super cycle wave 3, so on and so forth. So we've got a lot of climbing to do, but we've got a lot of long-term overlapping price data to deal with as well in the next decade or so. So if this is true, and we've gone 3 of 3 of 3, we've done a lot of the verticality since the lows of 2015. We've still got a lot of highs to come, but and we will get some huge breakout moves as well. Don't misunderstand me. You have to remember that 5th waves within the commodities market are more likely extensions than 3rd waves are. So there could be some massive astronomical run-ups at 5th wave degrees here at intermediate wave 5, potentially primary wave 5, cycle, super cycle, so on and so forth. But as they complete their larger wave 3s, the subsequent wave 4s will retrace most likely back into the prior wave 4's price territory, which means a lot of sideways, a lot of overlap, but with a lot of breakouts in between. So I hope that all makes sense. Sounds like a lot of gobbledygook, I know. If you're a follower of Elliott Wave, I hope you've been able to follow it, but I'm sure that even if you're not, you can look at the long-term chart and go, it's going up. and it's going up from left to top, bottom left to top right, and the waves have been getting smaller in time frames, suggesting smaller wave degrees, and the verticality of the chart has been increasing, and that's essentially what I've been saying. So, but what if all that's wrong? Well, it's only wrong in time frame if it's wrong. So here's an alternative idea. What if the cycle wave 1 we've been expecting, you're going to need a quick reminder here now, so let's just come back to the weekly chart for a minute to get a grip on what I'm talking about. And I will put it into a much clearer chart. We'll move ourselves back into log, and we'll bring up our long-term simple count again. Okay. What if everything we've witnessed in the blow-off move here since the low of 2015 wasn't a wave 3? What if it was a commodities market wave 5 blow-off? They do happen. Well, what we could do is we could move the 1 and the 2 down to here, like so. Alright, and then we could move the 3 and the 4 to here, like so. This is a correction from 2020 down into 22, 2-year correction. And then we could move the 5th to here. So instead of being 1, 2 now within the 3, which is my primary count, we are 1, 2, 3, 4, 5 and done into cycle wave 1. And now something on this magnitude is about to occur again here. Right. We broke through the median line to the 38.2, back to the 38.2. We broke through the median line to the 38.2, back to the 38.2 again. Is that possible? Maybe. It would bring us back to test the all-time highs, okay, of around the 2000 level. So, in other words, yes, I'm still bullish. This is still extremely bullish long term because this now takes us into cycle 3 of super cycle 3 or grand super cycle 3. But in the short term, oh fuck. You know, you would not want to be buying here now at the top if this is correct, because now we've got a mighty correction coming in. Now, I won't lie, and I don't want to hurt people's feelings, but I secretly go to bed hoping this scenario is the correct one. It's not my primary, it's my alternate, but I'm allowed to have dreams. And the idea of getting yet again another bite of the cherry of gold, especially in the physical gold market, to buy it at $1,500 less than it is currently for a long-term stacker of the precious metal, sounds like a wet dream. Okay, but I'm not sure we're going to get it, to be honest. But it's just an idea. So let's come into the shorter term now to explain this idea on the 2 hour. So we've spoken about the primary. We've just completed a triangle. Excuse me, just doodling on the chart. We've just completed an intermediate wave 4 of a triangle, A, B, C, D. We're now into intermediate wave 5 of primary 3. Okay, then we've got primary 4 to play out, primary 5, so on and so forth. So we're still going up for a long ways yet. So what if this is incorrect, this bullish count, and we're about to top? Okay, like that, the long-term count I was just showing you, the bearish count, that we're about to go into a massive cycle wave 2 correction. Well, there's a couple of ways we can look at that. One way of doing it is by simply saying, yes, this was indeed a triangle. Now let's just zoom out to get some context here. And this was a 5th wave extension. Okay. And what if it's eminently about to top? All of those things are possible. So we point at the same triangle again that we've just been dealing with, and we say, well, there's 3 into 4, right? Here's the 5th of the 5th, complete. So we've done our, if we zoom out to the daily time frame again, oh, sorry, I've got 2 copies of the same one. There you go. So we've done our 1, 2, 3, 4 extended 5th wave, 1, 2, 3, 4 triangle, coming up in the 5th now. We cleared the wave 3 high. We could even be done right now, possibly. And then the 5th is in, the 1 is in, and now here comes that massive meltdown to $2,000. It's not going to be over with fast, that's for certain. If we take the 1543 day super cycle wave degree correction, drag a copy of it over to here, we can get an idea of the kind of time frame we might be talking about from our current high. Now obviously this is one less degree, so it could be over in perhaps half the time, right? Taking us out into maybe 2027, you know. But if it's as long, it will be years in the making. Okay, so we have to be aware of that. Now, if this is the case, all of the structure we've built in this wave forward will break down, and we will break all of this sequence of higher highs and high lows. We will have massive reversal signals on the daily, weekly, monthly time frame, and it will be pretty obvious that we're putting a massive top up here. Okay, now there's also the possibility that the market already peaked at 3,500. So let's come in and have a look at this idea. What if we're not in for another sharp wave, another huge sharp correction, a zigzag like we've seen before? What if we're in for some massive kind of sideways chop? Well, we could look at that with this idea. Now, we've peaked in April at 3,500 in this idea. We swung into 3 waves into an A. We swung 3 waves into an expansive B, which may still be going, we don't know. And now we're swinging low in a C to complete a larger A. So this is all 2 degrees less. A, B, C. That's our first 3-wave move. We then create another 3-wave move to another all-time high in a B wave. So you can see what I'm saying. Expanding flat into expanding flat. Okay. And then we can then have a larger 5-wave moves in a C to complete that flat. Okay, which was here, and then we get a completed larger move. So if we move that, sorry, down to here, A, B, C, A, B, C. So A, B, C to A, zigzag up into B perhaps, and then another massive 5-wave move down in the C. And this could just be a huge sideways structure that's taking a long time to complete. But if it's going to be as long as we suspect the cycle wave degree, then it could be years. Okay, that's another option. So to sum up, primary count suggests that we've done an intermediate wave 4 that's completed, and we are now continuing higher within the 3 over 3, and things will continue to be bullish. We will top out in a intermediate wave 5, which will complete a primary 3, which will then start a larger sideways correction. If that's incorrect, we've got the idea that we've gone 3 into 4 into 5, may be done, may not be done yet. And this will top out a larger cycle wave 1, which will begin a bear market in gold, which may take us all the way back to 2000. Or it's an option where we just go sideways and chop back and forth for a very, very, very long time. Right, now my primary count suggests higher, so I'm going to stick with that. So this doesn't get invalidated. Let's put in a nice clear invalidation point, because we could be building another 1, 2, 1, 2 and get a deeper correction again. So I'm going to say the invalidation point is at the minor wave 2, which is all the way back down here. Now, I have gone on for a long time covering gold today, so we've got to be snappy and short with silver now when we get on with what we're doing next. 3312,195. Oh, 3312 spot 195 Thomas. And there we go, that's primary. So that's my view on gold. I've been bullish this whole time. I continue to be bullish. I've seen a completed triangle. I'm expecting it to continue to march higher in a larger 5-wave structure upwards. Now let's look at silver, the lagging asset, the asset which is yet to clear its 2011 highs. Let's bring up the long-term count here as well. Cycle wave 1 into April 2011, cycle wave 2 into April 2020, primary wave 1 into the peak of August 2020, primary wave 2 into the lows of August 2022, and now we're in primary wave 3, still within the base channel. Now, if Elliott wave plays out as it typically does with an impulse, we will see 1 and 2. 3 will take us out of the base channel, back test base channel, and continue to push to new all-time highs and beyond to find the wave 5 at primary degree, which completes cycle degree 3. As and when that happens, cycle wave 4 will then correct, and then we'll move up into cycle wave 5, and so on and so forth. And this is how I'm seeing it. So they're extremely bullish with a lot of price gains to come, and this could just be way... I mean, I'm not placing these at targets. Don't think for a second these are targets. This is just me throwing numbers out there to show the idea of the kind of structure we'll have. If we play to any significant extension at primary wave degree, it could be in 3 figures and beyond. Okay? And quite easily. I know that sounds super duper bullish, but that's the track we're on currently. So from the low of August 2022, how can we start to build this primary wave 3? Well, there's a couple of options. My primary count suggests it's just a good old primary wave 3 extension, the most common form of extension in Elliott wave. I know the chart looks really busy here, so we're just going to hide the base channel here, hide this pitchfork for the moment, and focus on the Elliott wave count. So this is how it breaks down so far. 1 into 2 at intermediate degree, 1 into 2 at minor degree, 1 into 2 at minute degree, 1 into 2 at minuet degree, 1 into 2 at sub-minuet degree, 1 into 2 at micro degree, 3 into 4 at sub-minuet degree, looking for 5 in sub-minuet degree, wherever that comes, and then we will be moving up into 3 at minute degree, 4, 3, 4, 3, 4, 3, 4, 5. So we've still got a lot of wave degrees within the 3 to finish. So this should be the acceleration phase. You know, remember the curve we saw in gold as it went through its previous all-time highs with silver still below it, that real stretch curve? That's what's coming now in silver, if this count is correct. So this is the vertical moment. So we've gone 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, and then we do this. Okay, and we start to curve upwards. So, super bullish count, right? Super duper bullish count. And I hope it's right. Recent invalidation points. We don't know if this is yet another 1-2. Okay? This could be another 1-2 at micro degree, and this is mislabeled. Okay, and then this could be another one at sub-micro, this could be one at minuscule, so on and so forth, and we could just keep labeling 1s and 2s forever. So for the meantime, we're just going to say we can't, at least if we're not going to do another 1-2, come back within this wave 1 price territory to complete a wave 4, and we definitely can't come back into this wave price territory, complete a wave 4, but we don't need to worry about it since we don't appear to have completed any wave 3 extension for these broader targets. So let's throw up a couple of wave 3 extensions then to get an idea of what we could be expecting. So if we just go off of the main one back here, which is the intermediate wave 1 low to the intermediate wave 2, our first wave target at primary degree, sorry, not intermediate, primary degree, at the 1618 is $43. We're nowhere near that yet. We're not nowhere near it, we're getting there, but you know what I mean. And that's kind of a minimum expectation. Intermediate degree, we've already gone through it at 31.23. Okay, we'll talk about that in our alternate count in a moment. Minor degree pushes us up to $41, and then the minute degree pushes us up to 38. All this overlapping structure, you see. Minuet is as small as 35. Everything's getting squished like an accordion at these smaller wave degrees. So none of the linear wave 3 expectations or wave 3 targets seem to make any sense given this overlapping nesting structure. They should all be much higher. But what if they're not? Well, okay then. Let's look at an alternate idea. Let's take the wave 3 extension for the intermediate wave degree and suggest that it's already in. Right, we're being really bearish at this point. So we're going 1, 2. Here's the wave 3 at exactly 168.18, $31.57. We get a correction into the 4, and this is now all 5th wave extension. Here's the problem. If this is 1 and 2, and this is 3, 4 can't come back without and correct into wave 1 price territory, and the target correction for the wave 4 at primary degree, for the wave 3 at primary degree is significantly higher. It's up here at 43 bucks. So we would have to extend at least, in the wave 5 would have to extend at least to here. And then the wave 4 can come back and correct, not into the wave 1 price territory. It's still bullish, but it's nowhere near as bullish as the extension. So I know I've gone off and spoken a lot of gobbledygook. So let's try and make it clearer, shall we? To sum up, we are in a wave 3 extension at 1 degree cycle, 2 primary, 3 intermediate, 4 minor, 5 minute, 6 minuet, 7 subminuet, and so on and so forth. We're in 3 of the 3 of the 3 of the 3 of the 3, and this is the vertical moment that the market's going to absolutely go flying higher. Alternatively, we've done 1, we've done 2, we are most of the way through 3, in the 5th wave of the 3 already. This will top out soon after it completes, and then we will start the wave 4 at primary degree, and then we'll have maybe that blow off 5th once that's over, but that would be a very significant correction, taking a significant amount of time. Finally, there's a bearish outlier, so I think this has been invalidated. This is the idea that this is 1, and all of this was a giant head fake into a 2. This has been invalidated as we've gone past the 1618 extension for the wave B, so we can just flat out delete this. No longer relevant. What that means is we now have to find a solution to stay below the 2011 highs, and the only way I think we can suggest it would be that we've had a 3 wave move to here, a 3 wave move to here, and then we're going to come down here as another zigzag, a double zigzag like that. And this whole thing on an even broader scale going back to 2011, like 14 years ago, is all part of an even broader head fake. Okay, I think this is extremely unlikely at this point. Okay, but that's basically all I can do. So as you can see, by pushing this beyond the bounds of any believable B wave for a flat from this low of 2020, we have to go to an even larger bearish correction. So I don't think this is right, but it's not impossible. Nothing's impossible. But I don't think silver prices going that low support the idea of silver ever being classified as a monetary metal at any point in the future. Because if we are in a debasement culture and an inflation culture, the current price action of gold and inflationary financial assets match our expectation for monetary policy. This suggests everything's completely the opposite, that we're into a massive deflationary environment, a massive deflationary crash, and we're not into the business of currency debasement anymore. I don't see that happening. But I suppose anything's possible, I just don't see it happening. So I've gone back and forth a lot. I'm sorry I've taken so long with this video. I'm getting back into the groove of dealing with YouTube. I spend a lot of time chatting to my patrons on videos that I often get too comfortable, and maybe that means I'm just chatting too much today. But either way, primary count, massive extension, wave 3 extension that continues to create smaller 1s and 2s and is now breaking out higher. Huge vertical move coming to new all-time highs. Alternatively, it's 5 waves up, almost complete within the 3. And we will then roll over into a 4. So we've gone 1, 2, most of the way of the 3 complete. 4 will roll over and move higher eventually after a larger correction. Or it's some absolutely ludicrous idea that makes no sense at all. There you go, guys. I know I've neglected classical analysis on silver, but we'll just do super fast coverage. On the weekly time frame, we're above all major moving averages. Bearish divergence had disappeared between previous highs on the RSI, did not play out. OBV continues to push higher, we're looking strong. Monthly time frame, momentum finally starting to pick up above previous peaks. OBV yet to confirm, RSI very overbought. Daily time frame, RSI just reaching overbought, OBV continues to march higher in a simple upward trend. MACD whipsawing back and forth. So we're above all major moving averages, we've still got a long way to run. Things can get very extreme before they're over. Alright then guys, we'll call that there. I know it's been a lot of waffle today, I'm awfully sorry to go on so much, but I've just been out the loop for a while with you guys, and I'm trying to get back into the professional version of myself where I keep things short and sweet, but you know how bad I can be at times. But either way, if you like what you've seen, And you're new to the channel, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you want to learn Elliott way for yourself, you want that weekly update on the major moving assets, you want to get assets of your own requested for me to cover in videos, then feel free to sign up to the Patreon. There's a link in the description box below. You'll be very welcome. Take care of yourselves, guys, and I'll be back with you with a Bitcoin update and a SPY update as soon as I can be. All the best. Take care. Bye-bye.